So now for our next panel, we welcome Regan, co-founder of Lattice, Michal, senior VP at Arca, and Anar, DeFi specialist at RockAway. And they will be talking about investing in OpenFi. And Pasarn, investor at Elixir Capital, will be moderating the panel.
All right. Good afternoon, everyone. I'm realizing that we're between you guys and beers, so I'll try to keep this short and on time. So my name is Pasarn. I work for Elixir Capital. We're an early stage VC fund, and I'm your moderator today. So I'll try to keep things well, spicy and fun and nice and hopefully concise. So before I start, if I could get everyone to give a bit of introduction about yourself, that would be great.
Sure. I'm Regan Bozman. I'm one of the co-founders at Lattice. We're an early stage crypto venture fund. We raised our first fund in 2021. Generally, our thesis is around investing in products that could expand the market. So that could be new applications that get people, a new audience excited about earning crypto, spending crypto, using crypto, or the infrastructure that enables those applications.
Hi, everyone. My name is Michal. I lead venture investing at Arca. We are a multi-strategy asset manager entirely dedicated to digital assets. We have 3 funds under that arm, one that is purely liquid funds that started back in 2018. We also have 2 illiquid strategies, one entirely devoted to NFT and gaming, and then venture funds, which is primarily focused on pre-seed seed, backing some of the best founders in kind of the product-defining categories.
Hello, everyone. I'm Anar, and I am mainly focused on research and investing within the DeFi sector at RockAway. RockAway, we've been investing in the space mainly within infrastructure and DeFi since 2017. Apart from the VC fund, we also have a credit fund where we provide liquidity to the DeFi protocols we invest in, and lots of other things. And I guess more recently we're focused on more of the consumer applications, whether it's payment applications or actually investing into the things that people will use apart from just the infrastructure and DeFi all the time. So yeah.
Hello. Okay. No worries. So thank you for that. So to set a bit of context, perhaps given that we have VC here, I think one of the main source of capital for startup within Web3 has been money from VC like us, particularly and by large. So we're often seen. Not sure about you guys, but I think we're often seen as being the voice of influence in the sector, in the industry. People often see us as being the dictator of how the industry would evolve, right? Which rightly or wrongly so. Particularly in DeFi, I think if we think about how OpenFi can cross the Web3 adoption, right? In that context, keen to hear what you think, what use cases or what area are you most excited about in OpenFi space, right? And particularly which area is most prone to adoption, right? So happy to, anyone could start.
Yeah, happy to kick us off. I think ultimately one of the areas that helps us to navigate the potential heat zones is to look at what is kind of the utility and the use cases of the products that we are, as a VCs, are backing. Behind the scenes, we do actually field a lot of calls with our limited partners, investors in our funds, that keep asking us, so what is real in this wonderful land of crypto that me, myself, or my kids are going to be using? And probably one of the natural responses, or at least the most popular responses for us these days, is looking at the really meteoric rise of stablecoins as ultimately one of the first vehicles that is running on these open permissionless networks that have found its product market fit. And with that, you look at kind of the scoreboard, which in our industry, CoinMarketCap, CoinGecko, or wherever you take your data to kind of look at just some of those sheer numbers. To put that in perspective, we're looking at roughly $150 billion in stablecoins out in circulation today. And just yesterday, the volume has been about kind of $90 billion that has changed and actively traded. So for me, that is probably one of the indications how we have reached the potential inflection point of an adoption of a technology that is useful in whether it's everyday life, whether it's speculation, and kind of the entire spectrum of potential use cases that it enables. That's just maybe one example, but I'm sure other panelists have others.
Yeah, I mean, I think you look at the breakout applications of last cycle, and it was generally some new behavior that like people enjoyed with like the ability to make money. So Axie Infinity in gaming and being able to just like play a game and make money. Helium like helping to basically kind of like roll out physical infrastructure. So basically putting a box in your house, and hopefully that box is useful, but it makes money regardless. These are kind of really like simple examples where I think you can like create a lot of new experiences around them. So I think we've seen a lot of like social fi stuff happen today. None of it's taken off. I think my view is generally like Twitter is cool and it works, and I don't think people give a shit if like Forecaster is decentralized. But money games are fun, and it's pretty obvious that people will do a lot of things to make money. And so I think someone this cycle will create some pretty like novel consumer experience that combines some component of like some social online action and like some financial reward, and I think that thing is just gonna like rocket.
Yeah, I guess like building on that, crypto is like still mostly used by like crypto natives, right? That's obviously obvious. So we still haven't really broken out into the real world, I'd say. It's still very like within our echo chamber. Yeah, like what I'm personally excited for is the future application, whether it's like wholly held payment applications that we had here today, or even Gnosis Pay, that are built on top of the existing applications that we have. Whether it's like private credit protocols or things that basically offer more options for consumers in general. So in developed countries, we already have lots of options. You know, we can put our money in a bank and earn 5% yield. That's cool. But we can do way more cooler things on DeFi. Whether it's like building a service where you can earn yield by providing liquidity into the hyperliquid vault. It's like perpetual DEX where you can, by providing liquidity, you can basically be a market maker and earn like 20% yield. So yeah, basically giving more financial services or options to users through a sleek consumer experience. Because at the moment, like accessing DeFi applications is it's still very like when I try and get my like family, parents, friends to do it, it's like even downloading a wallet and storing a seed phrase that like you get scared of that. So like a lot of things need to be abstracted away, and I'm hoping that a few of these like consumer applications can do this and really take us to the next level.
Cool, great. That's a great segue to my kind of next question is perhaps building on your example, what are the challenges that you find for these startup of companies to cross the chasm of mass adoption, right? How to go big. I think you've touched on a little bit of UX side of thing, stable coin. I'm feeling like there's a lot of regulations and other things. So keen to hear your thoughts on those, perhaps open for discussion. If you can touch on your example or others, that'd be great.
Yeah, maybe, just building on the previous answer, I guess we need to stop thinking about like just, okay, going for crypto natives, right? Like building applications for crypto natives. So you need to just, okay, I want to build a new neobank that just has better features for users, right? Like, and going from there. And I think actually using the crypto economic model, you have a few advantages to your side. You can issue tokens, right? So you can really lower the customer cost of acquisition for users. Instead of like Revolut giving $50 for every person you refer, you can build some kind of point system, or whether it's, there's been a lot of discussions about point systems, but I still think using tokens and giving tokens to your users is almost like giving equity of your application to your users, right? Like you can lower your customer cost of acquisition that way and do some really cool things. And yeah, maybe I'll pass it on to you guys.
Yeah, I'd say, I mean, wouldn't it be nice to have a potential share in, let's call it OpenAI, just because you have actually used ChatGPT once or twice, or maybe use it daily. But unless you were a very early stage investor and backer, you really have very little claim to potential equity and future of that business. So looking how kind of the economic primitives turn this a little bit upside down and maybe kind of reshuffle the stakeholders at the table, the idea is here to essentially incentivize and create incentives that will give some form of economic participation to the users. Now, there is a lot of debate as to what is the mode of it, whether it's the points, whether it's kind of alternative designs. And ultimately, we are at a kind of very interesting point in the market, including some of these points kind of now converting into the tokens and not having such a great outcome of at least kind of the last couple of weeks for those that are tracking. Which points to ultimately one of the bigger challenges that we see on the horizon, and that is ultimately build what people want and what is actually going to solve some of these pain points of the users does not always equal a potential token. There are other ways to incentivize and showcase the power of this technology. And I think ultimately the point that you have alluded to, which is obfuscating and making it easier for onboarding, becomes like a very important part of the funnel of bringing essentially net new users versus kind of essentially building for the same set of MetaMask wallets without necessarily kind of the new and fresh blood entering the stream.
Yeah, I generally agree with all of that. I think the only thing I would add is I think if you get kind of like the incentives right, like clearly people are willing to like deal with crypto UX today, right? Steppen was like not a great user experience. It probably scaled to like 3 million MAUs. So I think obviously like making apps as easy to use is great, but like I think ultimately it's just like building something people want and figuring out the right incentives, and I think that overcomes like UX challenges.
So that to me sounds, yes, we're in Web3 and we've got new technology that can help unlock a lot of qualities that can bring more people on, but ultimately it becomes a bit of a Web2 problem, right? Like UX, getting people on board. So, but one thing that I've noticed, perhaps personally, and not sure you agree, is a lot of the valuation in Web3 is extremely high compared to Web2, where I was from. So keen to hear, perhaps challenge you guys a bit, but what valuation framework, or how do you think about valuation in Web3, and maybe where you can, why is it so much higher? Keen to hear that.
Yeah, I mean, I think there's a huge liquidity premium, right? Like if you were investing in Series A companies and you'd have those shares liquid in like 2 or 3 years, maybe not guaranteed, but like, let's just say you just need that company to raise the next round of funding versus actually make it all the way to an IPO. I think those companies would trade at much higher valuations. I personally think like every valuation framework in crypto is total bullshit. I think it's pretty clear these things don't trade on revenue. I think if you benchmark like L1 blockchains, I don't really think there's like a coherent way to measure it. I think generally like the further you go down the stack, the higher the market seems to value you. That's like generally been true. And then I think these things more or less trade on like attention. And I think that's very hard to measure. But maybe there's smarter people than me who have like some sophisticated trading strategy based on that and have made a lot of money.
Yeah, valuation, favorite topic of ours. We talk it and debate it every day into the wee hours, specifically because we do have an entire spectrum of strategies from some of the most liquid instruments out there all the way to actually being able to invest in equities of the crypto businesses that are publicly listed. So there is a particularly very interesting point in time right now when you actually look back at the pullback in a crypto market equivalent to what actually happened to all the crypto-related equities, Coinbase, miners. There is absolutely fork in the road between how these two camps think about valuation. And at the same time, there's a spectrum of the panic. If crypto investor sees or doesn't like something on Twitter and senses the sentiment is going negative, sell it all, forget it, come back, cut my losses short. Very different behavior from a lot of the more traditional investors that actually look at some of the fundamentals and are able to kind of stick to their conviction, maybe even sometimes size up. So the delta of that pullback, even in the last week, you see a broader chasm in kind of the investor universe. But I think I wanted to riff a little bit on what Regan said with regards to maybe one of the reasons really kind of featuring on the bug of the crypto markets valuations, and that is to do with a little bit of a current structure of that market. I think kind of zooming out where all of us on this panel fit is predominantly very early stage investment, looking at teams that might have an idea, might have a product, some of that might be post-revenue, and we'll kind of decide to back, but vast majority are still at the very early stage. There is the unfortunate outcome of kind of where we are as a stage, as an industry, really dearth of investors at later stage. Anyone in kind of that middle growth market, which are very well-established markets in tech, is essentially non-existent in crypto. There are maybe 3 firms, most of them already actually tapped out and do not have necessarily fresh capital to inject. And that is what is pushing a lot of these teams to go out and issue a token, the famous TGE, pushing for raising rounds pre-TGE, because that is right now one of the elements to gain liquidity, potentially finance future growth, and kind of deliver on that promise. But at the same time, there is a lot to be said about teams that maybe decide not to go the token route and are actually trying to build a valuable business that is cash flow generative, and that will perhaps appeal to investors that might have a little bit more traditional framework of analyzing. So I would say it's extremely case dependent, and that's how we ultimately weigh in the decisions internally, looking at which segment of the crypto economy a given project fits, so we can kind of apply that formula, either kind of skewing a little bit more crypto native or fundamentally kind of cash flow type of analysis.
Yeah, I agree with both the points that have been echoed here. So I think there's difference between like the protocol layer, which kind of can get to crazy level valuations, and also the application layer. On the application layer, what we've actually been seeing is that valuations are coming down, whether it's like if you're using like basic price to sales valuation, so how much does Uniswap make, or how much does this derivative DEX make versus their fully diluted valuation. They've been coming down over time to kind of reasonable levels, like for crypto especially. And I think the points echoed here on basically the liquidity premium is important, right? Like in the traditional world, VCs invest and they're holding that bag for like 5 years until, at minimum, right? Like 5 years until they exit, and it's usually that they've found product market fit, they've done very well, and they're able to exit. And if not, like they can't get any money from it, right? So crypto is very different. You can launch a project in 6 months, 12 months, launch a token, doesn't necessarily have to be successful, and it will have some kind of valuation on the market. So because of that, like I guess that's why we see a lot of like high valuations in certain sectors, which kind of makes sense, right? And also if you think that crypto blockchain is the future or replace traditional finance, then of course you should also kind of pay a premium for that. Not necessarily like we like that, but that's the matter, right? So yeah.
Oh, fantastic. Now, if I could perhaps change the conversation a little bit towards the audience, which I presume are mostly people working in the industry. If a startup were to come to you in OpenFi and try to convince you that they can, perhaps in theme with the topic, cross the chasm of adoption, right? What are the key things that you're looking for, or what messages you have for startup in the room that might be looking to raise soon, in terms of, convincing you to deploy that money? And if you have particular example that you can think of, that would be great to hear as well.
So we are particularly on the topic of crossing the chasm. One of the elements that we've been incredibly excited about and looking really for startups to take it to heart and kind of integrate into their value prop is how native, especially to like the mobile experience, their experience that they are building is. And just looking essentially at the numbers, as VCs, we kind of, typically you either back the horse or the jockey, horse being kind of the market, an addressable market, jockey being ultimately the team and kind of the human capital behind the idea. So on the two, in case of specifically consumer type of applications and kind of the broader OpenFi, we really look at how kind of native they are to the generation Z and kind of beyond that are going to be ultimately users of those products. When you look at kind of just some of the statistics, vast majority of the generation doesn't even know what a folder is. And so that gives you like a perspective where they operate, how they kind of interface. And the product sensibility is something that we pay extreme attention to. And specifically, if you're telling me you will kind of bring on the new cohort user, I want to kind of touch the product and really play with it, because a lot of investments that we have made historically in that category were ones that we were able to test for quite some time, or we're like in the beta testing before they even launched. That's how, by the way, we've ended up actually backing Sky Mavis as one of their first investors before Axie was released. We were kind of just basically battling out internally. I was like, wow, this is pretty addictive. Well, let's get a piece of it. And so that's, I think, ultimately, we love to ultimately put our hands on the products to get the kind of visceral experience of what a user on the other end might actually feel. And kind of, yeah, those magical moments is part of, I think, the secret sauce behind these crossing the chasm challenge.
Anyone else?
I think a product that like natively like creates a truly new experience with crypto that ideally fits into like an existing behavior that's where we've seen like winners. You know, I think Axie, as you mentioned, like people play games, and was Axie like a revolutionary game? Like no, sure, like some people find it fun. That's not like the vector it really innovated on, but you could like play a game and make money, and that was like a novel experience. I think like Grass has kind of been the winner of this cycle in terms of user numbers. And if you're not familiar, it's basically like a DePIN network that sells your unused bandwidth to companies that are scraping data to build AI models. For the end user, you don't really need to care about that. It's basically a browser extension, and like you make money. And that's really simple, but like everyone surfs the web, and fuck, I've never been paid to like surf the internet, right? Yeah. That's cool, and it's really simple. And so I think kind of financial innovation in that framework, we tend to get very excited about.
Yeah, and I guess, yeah, building on those again, I guess yeah, founder market fit is obviously important, right? Like you want a founder that has some experience in like building stuff that's kind of relevant to what they're building now, but also having founders that are kind of crypto natives or have been in crypto for some time, that understand how the market works and understand how to address their initial market, right? Although we're saying that, of course, we want to get outside of just marketing to the web3 community, that's your initial go-to-market. That's your initial beta testers, your power users that you need to be able to market to and get on board. And a recent example, like we haven't announced the investment yet, but it's basically this community engagement platform, contest platform, and the founder is a prolific writer in the space and has a big following that that he can easily bring on board and basically get people to make contests on this platform to vote on things. I can't go too deep yet, but yeah, we'll announce it soon. So
did
maybe
you get Mr. Beast?
Not
free.
Yeah, not quite yet, but he might be using the platform to host contests, so that's possible. That could be cool. But yeah, like founder market fit and also just like being in crypto and understanding how crypto works is important. It really depends on the protocol, right? Like if it's like a really crypto native protocol, then that's even more important. But if it's something on the more like infrastructure side or RWA side, then you know it's about sourcing the institutional capital. So it's a hard question to answer, but like generally, like yeah, founders at the early stage are really important. So yeah.
Indeed, I think it's indeed a combination of founders, whether or not they found their edge, their product, and ultimately for mass adoption, there's a lot of UX, there's a lot of ability to draw people on, be it financially or entertainment or other personal gain. Great. If I think we're at time, so if we could perhaps have a last message from you on terms of the startup that are looking to get funding. What are the tips in this, particularly in this environment where the last week has been a bit more depressing?
Don't look at the price chart. Trust me, this is probably one of the biggest distractor and detractors, something that we are internally at Arca really kind of fighting, just because we have a very liquid fund that ultimately marks to market. But one of the biggest learnings that this is kind of more often than not quite a substantial distraction and detractor from founders that are trying to kind of build a product that ultimately is for broader masses and users. If you have that product, the price action will reflect that, but don't kind of put the kind of cart before the horse.
Yeah, I think so. It's all about telling a story. Like that's really what fundraising is at the earliest stages, and so I always just like focus on that.
Don't listen to VCs too much.
That honestly is good. It's good advice. Yeah.
Indeed, I tend to agree. I think people look at VC and think we control everything, and actually, we're the takers, right? It's the entrepreneurs that actually drive the direction of the industry. So with that, do we have time for questions, or should we pause there? All right, we'll pause there. All right, thank you, everyone.